Well, hello, ladies and gentlemen. Welcome into a terrific Tuesday. I'm your lovable, cuddly host, Sweet Bobby. Hope everybody's doing good. Real traders never trade alone. They trade with their fellow nerds. Yeah, back to the good old days, man, when we were doing the 111s and everybody was happy and satisfied. So maybe we're getting there again. So, real traders never trade alone. They trade with their fellow nerds. We got Mark in the house. We got Brad. We got Brandy. We got Brandon. We got Bruce. All the B's in the house. Bobby, Brad, Brandy, Brandon, Bruce. We got Chris. We got DB. We got Matt. Jolly Wally. Roll Tide. Looked good against the uh who was it? Wisconsin. We got Mo in the house. We got Schwaz in the house, and Stacy. Hadn't seen Stacy in a while. So good to have Stacy here. So let's see what the thing is going here. I don't understand what's going on. The uh the linear regression shows that the market was up, but this is showing that the market is down. So we had a while ago we had 6, 6, 6, 6 even. It's just strange. Look at that. There it is. 6, 6, 6, 6. Waka waka. Down 13 and a half points, 0.2% down. The NASDAQ down 46 points. And they look similar. VIX is at 16. Wow, we were at 14 yesterday, so we're at 16 today. So VIX has swollen up a little bit. AD negative 132, AD high 107, AD low 212 negative. And look at this, y'all. The AD doesn't even look like the same thing as the market movement, does it? Look at this. We've been going up, 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 and up. And we went up, 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 and then down, down, down. So this is not they're uncoupled a little bit, which is a little bit strange. But interesting. We're below VWAP. We're below the opening 30-minute range. Let's look at our volume. Look at there. Look at all the number of volume bars that are under 2,000. It's still, I think it's lightly traded. And tomorrow's the big day, y'all. Tomorrow's the big day. And we'll see what happens. I gave you the two schools of thought. One, if we get a market cut or a rate cut, and people go, "Oh no, that means that the economy's not looking good." We could see a sell off, and then if they're just like, "Yay, we finally get the cut," they could be ecstatic and run it up. So I could see two different things. Now, what if there's not a market cut tomorrow? Then I think everybody's going to be disappointed, and we could get a little market sell off. Right? I think, or they could say, "Well, that means the economy's doing great, so let's run it up." So there's the two school of thoughts that you got to think about when you go to market cuts, to rate interest rate decisions. So let's see what our volume profile looks like. Aha. Now, someone was saying that their point of control is not, and the thing is, that has nothing to do with the big green monster. As long as you've got it on the 10-day, 30 minutes, what is probably different, I thought about this overnight, is that you probably have overnight uh, on the chart. So somewhere over here, you got to go and change it to where it doesn't include the overnight session. So I think that's what it is. So the high of the day, 66.88. We are at the point of control, and we are over bought for the fair value zone below. That's what we are. So we would anticipate a move down here and perhaps into here. So it looks like the move up is a little bit overdone, right? Because this is what this does. This chart does is it shows us overbought, oversold, and fair value ranges, and we are overbought. So we anticipate the next 10 days a move down, at least into here, and maybe into here. But that all goes out the window with a rate cut. If we go into this area, then we're oversold for the fair value zone above. So as I always joke, if it doesn't go up, it's going to go down. But what it probably looks like is a probability cone that looks something like this over the next 10 days. Right? That's probably what we're looking at somewhere in here. So interesting that this market is just so resilient to so much stuff. It just keeps going up, even though it says it's a little bit down today. Here's why I was a little confused. And maybe y'all are seeing something that I don't see, but when I see the linear regression, look at this. My linear regression shows that there's a move up. Oh, isn't that strange? But that's what we said too, right? As we said that we went down to the bottom here, we anticipated move up. We talked about this area here, the 6,500. We just couldn't get above it for a long time. Look at this. We tried, we tried, we tried, we tried, and we finally got above it. We finally got above it. So this, even though our big green monster looks a little bit bearish, this continues to look bullish, doesn't it? Continues to look bullish. Let's see how our little positions are doing today. We're up $3.98.
Well, we're moving on now. Moving on up to the side. To a deluxe apartment in the sky.
And it says that our TQQQ is up. That's strange with TQQ being down. This may be one of those things where it's not showing correctly because it'll make me log out in a little bit and I'll log in and it'll show this thing. I still hate that I've got caught here. Here it is. This will show us the real thing here. Let me log in. I should log out every day. There we go. That's more like it. So we're down $1.16. Then we're up $2.08. And here we're down a little bit. That makes more sense with the NASDAQ being down a little bit. So we see that we've got this two calls that are giving us a little bit of pain. We would be up a lot more today probably if it were not for these two little calls. But I still think I'm just going to leave them there because tomorrow could be a day that we get a move to the downside, right, with the rate cut. But we could get a move to the upside, which could be pain, and maybe I need to take these off today. We'll wait a little bit. Let's see where are our strikes at. Let's see. Let's see where our strikes are at. Strangle is 6,700. We're at 66.67. And our second strangle, we've got 31 days on this, is 67.75. That's a lot better. And let's see, that's got 31 days on it, and our other strangle has 31 days on it. So the plan is to take this thing off when it gets to 21 days. That's my plan anyway. So we got 10 more days on those. So hopefully we'll get a little capitulation, a little bit of maybe a move to the downside before we take those things off. But everything's looking really good, y'all. This is what's amazing. Look at this. Our hedge is up $30. That makes no sense since the market's just been up, up, and up, up. So our short 3 is making more than our long 7 is losing. Isn't that crazy? Really crazy. So Bill is doing what Bill does, makes us a little daily money every day. And we're up $13 on the MES positions. That's really good. But I think the more I think about it, with this bull market, the more I hate doing the call side. And we mentioned that yesterday. The call side is what gets me in trouble so many times. So I think it might be a thing to where we just kind of more focus on, we could do these sparingly. And that's kind of what we've done anyway. We've got mostly 111s on. Our deltas are negative 22. I like carrying negative deltas. Theta is 46, y'all. Wow, Wonka, right? We want it to be around 36. We're at 46, and we're using 37% of our buying power, which is about right where you want to be. You want to be about 25, 30, 35, something around in that area. So we're at 37% on a smaller account. So I think we're doing really good there. So that's about it. I don't see adding any change. Again, what's this? We've got 14 days on these puts here. And you understand the reason I'm not taking those off is because I don't want to give myself even more negative delta. So I think it's best to leave those on there. Now you could take them off if you wanted negative delta, especially if you think tomorrow is going to be a down day, right? You could take those off, and we could afford to give up some theta And I think I'm gonna leave those on. Look at that, 59.25. I think those are absolutely positively safe. And we got 14 days on this one, 59.50. 14 days on that, 55.25. So I'm gonna leave them on. That's questionable, but I could take them off for sure, or I could leave them on, but I think I'm gonna leave them on. So everything looks really good in the account. So that is our session for today. Not a lot to do, really. Just sitting here and waiting for theta to decay. And our extrinsic value is now up to $1,008. That means there's $1,008 that we could potentially make still in the account with our existing positions, which is really cool. All right, y'all have a good rest of your day. I love you to pieces and can't wait to see you tomorrow.